Good afternoon, everybody. This is Gil, and I'm flying solo today because Dr. K is in Costa Rica in a little, I think it's called Escazú, which is a little resort town outside of San Jose, Costa Rica. And there was an electrical storm, a tropical storm with a lot of lightning, I guess, and it knocked out their internet down there and may have, I say may have, hopefully, fried his computer. Anyways, I'm assuming everybody can hear me just fine, and you can see my screen here with the 4 charts, correct? Anybody awake out there? Very good. All right. Anyways, so today, the last couple of days, we've seen the market sell off, but if you guys recall last week during our webinar, we talked about the potential for the market to come off. And so you see that in the NASDAQ chart here. Make it a little bit bigger for you, but you can see that here where we've come off for the last 3 days below the 50-day moving average and testing the lows of early September. Now the NASDAQ sort of stuck here in midair below its 50-day moving average. So the 50-day line now is an area of overhead resistance. If the index can get back above that line, then this may be just another shakeout that then sees the indexes head back to the highs. Now, even though it looks like the NASDAQ is stopping in midair, when you're watching the market come down, you have to watch all the indexes, and primarily I'll watch the NASDAQ composite, the NASDAQ 100, the S&P 500, the Dow, and the New York composite, and the Russell indexes, Russell 2000. So I'm watching all those indexes, and a lot of times when you see one index stopping in midair and trading up off the lows, which is what the NASDAQ did today, it may coincide with another index doing something that's more logical in terms of the technical signals that we look for a potential low to be put in, at least on a very short-term basis. I mean, I don't know if we're going to rally up out of here or not, or whether this is just going to be a one-day bounce off the lows where you see the S&P 500 has undercut the September 12th low, which would be this low right here. Oh, that's a nice color. You can see that real well. Let me find something gaudy, and how about this right there? There's a September 12th low, so you can see that you undercut that today. Okay, so that sets up on higher volume. See the volume increasing. That sets up an undercut and rally situation for the index. So if you saw that this morning, I saw it, and I had a couple of shorts out that I decided to cover once I saw the S&P undercut that low. Okay, and usually when you see one index, like I said, with the NASDAQ, where it's stopping in midair, it looks like it is, it might be associated with another index, such as in this case the S&P 500, undercutting a prior low. So somebody says Dr. K is at the bar. I think Dr. K wishes he were at the bar, but I think he's got bigger problems than that, especially if his computer got fried. Anyways, I suppose if your computer's going to get fried, you can't find a more exciting place than Costa Rica. Although I think I like Hawaii a little better. The bugs are smaller in Hawaii. So look up Hercules beetle, and that's something you find in Costa Rica. It's a beetle that's about the size of a small puppy. Anyways, so I think it'd make a great pet, I suppose. In any case, so you can see that that's the position we are in with the indexes. So we're in a position where we could rally. Now, when I see this happening, and just give you a little background or review of my situation this morning and what I was doing, because I was short in the morning, and I made a little bit of money on the short side before we saw the undercut by the S&P 500. At that point, what I do is I look around, and I notice Amazon's bouncing off the 20-day moving average. I want to make these a little more, there we go. You can see Facebook here is interesting because it looks this morning like it's going to blow apart, and it's just going to break the 50-day line and head lower. But I figured it could break the 20-day line and then test the 50-day line. So I'm actually was short for that move over the last couple of days, and I actually shorted up around 130 because I figured if it's breaking out, you get a trend line breakout 4 days ago, then I'm going to short it. So I did, and it comes in a little bit, and I covered it yesterday and then re-shorted again this morning before the opening, and it came down to the 50-day line and it undercut this prior low, which I think is 126.80 over here. So at that point, let me clean up my mess here. At that point, you've undercut this low, okay? It is below that low, so trust me on that. But you're also hitting the 50-day moving average, which here's a 50-day moving average moving up. And you can see the stock basically bounces off the 50-day moving average. So this low becomes relevant on that basis. And so that gives it a little more solidity in terms of being a legitimate potential buy point, okay, if you're trying to play an undercut and rally. So at the same time, I'm seeing the S&P 500 undercutting its September 12th low and starting to rally. And then I'm looking at stocks that are on my watch list, and I have to admit that list is getting a lot narrower lately, that are in positions that might also coincide in a sort of undercut and rally way. And that's what was going on with Facebook. So another one that was similar in that regard was Microsoft, which undercut this low back here in about mid to late second, well, it's starting the third week of September, I guess, or wait, 1, 2, 3, no, the last week of September in here. Is that right? I don't know, whatever, it's mid-September, this low right here. So you undercut that. That was in a position to rally, so that was another one I tested. I like Qualcomm as a big cap, big stock name for the NASDAQ, and that one came right into the top of the base here, so I thought that looked perky and viable at that point. And I'm also using the 620 charts. You can see early in the morning you had a MACD stretch down here. As we're coming down here, you get the MACD stretching, so it's stretching to the downside, and then you get a cross here. At that point, you come up off the lows and you retest, volume's kind of drying up, and then you push above the 20 period line, and then you get a cross here. So there's a buy signal as it's tracking sideways along the 65.20 area. And it trucks on higher from there and closes up on the day. What do we close at? 65.70. So that was another one at about the same time that the S&P 500 was starting to undercut and rally. This was flashing a 620 buy signal. It's one stock I'm keeping my eye on. Now, I have a general theory here that I'm operating on right now, which is essentially that this hot IPO stuff is pretty icy and got cooled off. You know, it's been iced over. And a lot of these are morphing from previously constructive bases or, you know, uptrending stocks to late stage failed base situations, because now what you have is, say in Acacia, you have this base here that was setting up in, and you actually did undercut the lows of the base here, and you bounce off the 50-day, similar to what, in a sense, thematically, like what Facebook did today, and then you bounce back up to the 20-day and you gap below. Well, at that point now you're failing. And this turns into a short right at the 50-day line on Monday. So if you could borrow the stock, and I can actually borrow it, but there's a fee for doing so. A lot of times they'll do that. But it comes down, I'm not doing this too great, but it's come down towards the low of the viable gap up and find some support above that point. So, but at that point you're undercutting every single low in the pattern. So you're in a position for a move back up to the 50-day. Now the question is whether this doesn't just become a short sale at that point. So, but these are breaking down, and you'll also see, you know, the other one that was hot. And of course, you know, when they're up there and basing, everybody thinks, you know, like up here when it's breaking out, you could consider this a later stage IPO breakout, because if you look at this, you kind of break out here, and then you break out here, and then you break out here, and then you fail. And so at this point, when you drop back below the top, you're starting to fail. As soon as you break the 20-day line, that's your first sign of a failure, coming below the 20-day line and the prior breakout point. And then you bust the 50-day line and head lower. So now you're undercutting this low over here. Maybe it'll turn it back to the upside, maybe. Somebody's asking, what broker do you use? That's secret. So I don't tell anybody what broker I use. I have a contract with them. Anyways, what does it matter what broker I use? What MACD settings are you using? Well, this is on the 620 chart. So the MACD settings are 620, I don't know, not 9 and C, I guess. So basically 9 period, I'm sorry, a 6 period yellow MACD, a 10 I'm sorry, a 20 period blue, and the same thing with the moving averages. These are exponential moving averages. 20 period is the blue one, and the 6 period is the yellow one. So, but I'm assuming you're a newbie because you don't know what I'm using here. So you're looking for one yourself. Okay, well, I mean, they're all the same. So I don't want to recommend any brokers. So I remember once my lawyer telling me don't ever recommend a broker to anyone. So, okay. Anyways, I don't, but I think any of the good ones that are reasonably priced, you know, name brand ones are fine. I've heard Interactive Brokers is good. I've heard Schwab is good. Fidelity is good. You know, what I would do is check them out yourself and just see what you like, because they've got all kinds of platforms and fun stuff. Also check on how borrowable stocks are. So, you know, it's not so much what broker you use, but what they have available. I guess I check on margin arrangements and how well they can accommodate your margin requirements and what's marginable and what isn't marginable. So anyways, where was I? So I'm thinking with all of these hot IPOs cooling off, we could see a shift into some of these big cap names, and that would include Facebook. You're already seeing money flowing into Apple. It seems like it's holding up. I've actually been shorting this off the peak here, and it comes in a little bit, making a little bit of money, but I can feel that as it comes down to the top of this structure here, it doesn't want to really give it up. So it almost looks to me like it probably wants to go longer. I'm sorry, higher. And Facebook, maybe it's going to set up and come out of here. Watching Google, it's basically in a base. I mean, if you look at this, you're just in a big base. So these things are all basing, and you see that in a lot of them. Microsoft, same situation, just in a long base. Amazon's been acting better. So if I group all the big stock NASDAQ names, so Apple, Amazon, Google, Microsoft, I'll throw in Qualcomm because I think it's a little more dynamic than, say, Intel. But you can see Intel just pulled into the 50-day line. Qualcomm did the same thing. And these are big stock names. And it's possible that we could see like a rotational correction here. That's sort of what I'm looking for. And maybe we see a rotation into a lot of these big cap, big stock NASDAQ names that have been basing for a while. So, you know, because you see these bases, okay, there's nothing really exciting. And if you look at them, and you're trying to buy stock within the base, they'll put you to sleep. But they could be setting up and trying to get themselves ready for a move higher. So if that's the case, then you might see the NASDAQ composite breakout in a much more forcible way than it has, because you had the breakout back here in the earlier, or say mid part of September, and then it really hasn't gone anywhere. Now it's broken down. So, you know, this really isn't going anywhere because none of these big stock names aren't going anywhere. And you can throw in, say, for example, the biotechs hold it back as well. So you have Biogen, but Biogen's really just in a base here, and it's drifting lower and under the 50-day, but above the 200-day. But it's sort of just setting up in a big consolidation going nowhere. Maybe we're waiting for earnings, which come out in a couple of weeks. Amgen's another one that will be have a fair amount of influence on the NASDAQ. And some of these are, you know, Gilead's pretty much done, but you can see Biogen is trying to base. But I look more at the big cap techs in the NASDAQ 100. So you see Netflix broke out of a range here and it's pulling back. So if some of these can get moving, I think it could drive the market higher going into year end, and we rotate out of some of these hot goodies, you know, because we've really seen them blow apart. So Impinj is below the 50-day line. I don't know if this puts it in a position where it could rebound. You might watch that. Tried to do it yesterday, but it didn't happen. And of course, Acacia, Twilio, Line Corp, coming off the. Now this one was never that obvious to anybody. Not like Twilio and Acacia. Those were very obvious to people. And I think this is probably a little less obvious. So this one might be something to look at on a rebound off the 50-day. I also like Momo. I think it's relatively recent IPO type material. So for example, if we look at the weekly chart here, you can see that it's just barely come out of this big structure. And it's a little bit similar to Weibo, what it did when it came out of this big structure of its own back earlier in the year, about May, let's say April, May, June, sometime in that period. And it came out of this big structure after coming public over here. So, and it's just continued higher. So I look at Momo as having some potential like that, and it's just come out. But the trick is buying it, I think on pullbacks. It's had a couple of pocket pivots over the last few days, and it was acting pretty well. And then this morning it came unhinged as the market was gapping down pretty big. But by the end of the day, it was closing back above the 20-day line, which I think puts it back in a reasonably low-risk buy position, if you like this name. So, I think that one's got some potential. I think a couple of weeks ago I compared it to Baidu back in 2000, I think it was 7. And remember, Baidu came public in 2005. I remember that very well. And it didn't go anywhere. It had a big move the first day, and then it just plummeted back to the downside and built this huge 2-year structure, and then it finally broke out. And so Weibo reminded me of that at the time back in May, June, and coming off the Brexit sell-off back at the end of June. And so now Momo reminds me of that. So Momo, in a sense, reminds me of Weibo, which reminds me of Baidu. And so maybe this has some potential. And, they're also not that obvious. You don't hear about a lot. Like I know Twilio and Kacher were becoming one of the most popular stocks. I think on stockcharts.com they always show what's trending. But anyways, so you can see I'm looking at some of the big cap names. I like the Qualcomm. You're pulling in here. Your stop is pretty well defined here at the top of the base, or 63.51. I like Facebook. We'll see what it does. But I want to see what some of these do tomorrow. Maybe we have a little bit of a pullback and you're able to step in. But this is what I would be watching for, okay? Some of these other names like Alibaba, you're at the 50-day line. So that's a nice pullback to the 50-day line. I consider this sort of a mix between new merchandise and big stock type stuff. So let's go through the... also, you guys, if you have any questions, make sure you're not shy about asking them. I'm going to try and pull up the list I have in here as soon as I can. As I can clean everything up here, just give me a second. Now I know that list is in here somewhere. Bingo, there we go. Okay. Some of these may have been taken off in the last week. I'm not really sure. I'd have to check the list again, but this is what I've been monitoring. So we got Acacia, which I pointed out is looking like a failed base, and you can see it on the weekly chart. I mean, maybe it's getting some support. I mean, it could drop below the 50-day line and then try and set up again. So you don't necessarily take it off your radar. But while it rests, we might see some of these big cap stocks push higher and take over some of the slack, or take up some of the slack as some of these hotter goodies fall by the wayside and take a break. So I'm trying to get this straightened out here. Okay, how's that look? Everybody see everything nice? I want to be able to flip between the weekly and the daily here. So we're going to set this up this way. Okay, here we go. American Woodmark, I don't really care for that. That's not really on my buy list. Align, I think this is junk. Yeah, I know I had a pocket pivot up here, but to me it's kind of junky looking. Almost looks like a short. And I think we took it off of the list. But you can see how you've broken down, and this is a structure here. So you've broken below the 10-week line on the weekly chart, and here you rally back into the 20-day line, which might even make it a short here as a failed sort of base structure. Amazon continues to act real well, so I like that today at the 20-day line, as I was pointing out. Avago hanging in here. This is a structure here. It doesn't look all that constructive, so it's hard to tell whether this is a long or a short, but you are at the bottom of this sort of ascending range here, so maybe you're going to try and come back to the upside, but that's not one that I'm really watching here. Baba, like I said, is at the 50-day line. That could be in a position to be bought. Biogen, as I pointed out earlier, is basically in a big base, filling the gap in here, so it's a possibility that it might try to come out here on an undercut and rally type move. So if we look at this, You can see how you're undercutting this low, and this might be a more significant low than this one, even though you did also get an undercut and rally off of this low right here in the early part of September. So that would be this low here, and you undercut this low, and you turn and you rally, but then you roll over again because the market loses upside momentum, and you're undercutting this low now here, so maybe that's going to send you back to the upside. And you got 1, 2, this is your third wave down. So essentially that's 1 wave, 2 waves, 3 waves down. So this could be setting up for an upside move. So that's something to watch. You are actually above the low of the on the undercut and rally. So when you come see this low right here is 293.83. You close at 294.41. So you're just above that low. So the way you play an undercut and rally is pretty simple. Once it gets above the prior low, so this gets above the prior low, you just buy it using that low, and you can add a % or 2 if you want, if you can tolerate that on the downside for a stop. And that's just basically how you play it. You don't need to wait for it to go up 10% or 3 points. So I've talked about this many times before, and it still applies. So it's a real simple setup in my view. And if it occurs, if you see an undercut and rally in a stock occurring at the same time that you see an index doing the same thing or the general market doing something similar, then I find it has a good chance of working. So that's one way, not just every undercut leads to a rally, but that's one way to give a little more oomph, a little more confirmation. Triple D is, this thing sucks so badly you can hear it from a distance sucking. That's how bad it is. But this one's done, so I wouldn't even mess with it. But it's, it's not part of the thematic thing I'm looking for in terms of big stocks. Eagle Pharmaceuticals, a nice little pharmaceutical name if you're into those. Kind of thin, back to the 50-day line. But speaking for myself, not something I would play at all. I mean, if you have a small account and you like to mess with this kind of stuff, yeah, it's fine. But I look for big stocks, and I look for things that might have a little more thematic basis than just being a hot little biotech. And if they're thin, in my view, if they're not trading at least 1 million or 2 shares a day, then outside of a group of, say, small cap funds, I don't see a lot of institutions trafficking in these, not the way they would traffic in something like an Kacher or Twilio, for example, or Baba or any of the other hot names. Facebook, we already talked about that. I think this could be in a viable position. If you retest the 50-day tomorrow and this 126.80 low, it might put it in a very, very viable position. So somebody's got a hop. Yeah, the video will be archived and available later today as soon as we get it posted. Here's one that's died, Fabrinet, but a small stock. Not a fan. Gigamon is starting to, it's pulling back into the top of this base, so I don't know if the pullback into the 50-day makes it viable ahead of earnings, which I think are at the end of the month. But that's essentially what you've got going on. The thing here is you have to watch now for a breach of the 50-day line, because if it busts below the top of this base and the 50-day line, then it could be headed a lot lower. And it would be a late-stage failure. So Glaukos, I like this name as a new merchandise sort of biotech with a compelling theme. So, but it's a biotech, and it's going to be pretty volatile. It's smaller, thinner stock, so it trades 497,000 shares a day. So it's going to be more volatile, and you have to understand that that when you're in a funky market environment or negative market environment, or the market's selling off, whatever you want to call it, these things will come in a lot harder, and you have to be a lot quicker on the draw and more opportunistic in terms of your entries. So Grubhub got a pocket pivot off of the 50-day moving average today, that looks pretty constructive. I think they come out with earnings, though, in a week or two. Intuitive Surgical also had a pocket pivot off of the 20-day line. So Dr. K doesn't really follow those types of pocket pivots, I don't think. But I'll look at pocket pivots off the 20-day line. I'll also just buy stocks off the 20-day line. We looked at Line, okay, found support at the 50-day. So now you want to make notes on these, because I think some of these are potential buy situations if we get the market to turn around. But some of these, they're just off my radar now because they just look like garbage. Like this one, this looks like garbage. But I never really cared much for this stock anyways. Mercado Libre, it's relatively thinner. Not that much though, because it's well, now it's $168 stock, but it was close to 200 a few days ago. But it's down a fair amount, and definitely if I own this stock, I'd have been gone yesterday on the big volume gap down. Momo, again, I talked about this one. I still like this one. I think it has some potential. NetEase has hung in there pretty well, amazingly. But, you know, the Chinese stocks have been pretty strong lately as well, so this hangs in at the 10-day line. So NVIDIA, now I consider this a big stock NASDAQ name as well, and it found support at the 50-day line. Earnings come out in a couple of weeks, so you'd be apprised of that. But this one looks okay, hanging off the 50-day line. Impinged was impinged upon by getting knocked below its 50-day line, and it really can't get back above that. Square is back to square one. See, I'm just loaded with puns today. That's because today was such an exciting market day. Anyways, back to the 200-day line here. That to me is a last stand support level. So if you're going to buy it in here, that's probably your lowest risk point. In my view, it should have come out here, but I guess it's just getting weak with the market over the last few days. So the 200-day line becomes critical in terms of support. And if you bought it here, you would be looking for it to come out of here, perhaps along with the market. So also keep in mind, I think they announced in the first couple of days of November. Here's Shutterstock holding the 50-day line, so that looks okay. But that's a thin little name. To me, not really something I'm all that interested. Here's Twilio getting creamed, and we looked at that before. Look at how I find this pattern amazing, because it shows you that in this market, what buyers one day can't buy enough of, and that they're driving the thing higher, like it's going out of style, the next day or in a very short period of time, they can flip completely the other way, and they can't get rid of the thing as fast as they'd like to, and they just keep pummeling it. You know, now admittedly, these guys announced a secondary offering last Friday after the close, sneaky of them, and gapped down on Monday, and they've continued lower since then. It still looks like garbage, and I don't know where they turn this thing. Maybe it comes all the way back down into this structure here, down around the 44 level. It certainly seems to be headed that way, and then you bounce off of there. So would look like this if I wanted to draw it. So you're not too far. You know, maybe they price the offering, maybe it does try and find support there. So if you like to try some of these on pullbacks, I certainly like buying pullbacks much better than I like buying breakouts. I think buying breakouts in this market is a recipe for disaster, or at least steady losses. And if you are going to buy breakouts, at least try to be creative. You know, you're better off buying this as a breakout on a pocket pivot signature rather than buying this as a breakout, which the whole world sees. And then I would say everybody who reads IBD, but these days I don't think there are many people who read IBD. But I think most people have been sort of inculcated in the methods of buying breakouts, which is technical analysis 101, and doesn't really work as well as it used to in the past. So let's see, Ubiquity, this one came apart yesterday, and then there's one, you know, acting well, and then boom, they just bust it. So I think this one, in my view, it was never worth buying in the first place. 440,000 shares a day it trades. It's had its moves, but nothing really spectacular other than, you know, what you picked up, say, on this breakout here. You had a decent move and a gap up, and then it's just kind of trickled higher, and more recently flattened out, and boom, off to the downside. But notice how, if you're paying attention, you might have picked up that if you look at the pattern, look at this. Before you break, you got this spike in volume here, this red spike in volume, this red spike in volume, this red spike in volume, and this red spike in volume. And notice how you didn't really have any big spikes in volume relative to the blue upside volume all the way up until you got to here. And then this pattern starts to take hold. And now you see that come to fruition as you roll over and bust. So something to think about when you start seeing a lot of red spikes in a base. Sometimes that can be just signs of steady distribution of the stock, and then eventually it does break. So if you had something for a while, that may be one sign you could look at as a potential sell signal. So People are always asking, well, how do I know when to take profits? And that might be one thing to look for if you see it in a pattern. So EDU, someone's asking about. Did I go through that one? Maybe not. It should be on the list, or did we take it off? No, it's in there. EDU, I guess I must have overlooked that one. New Oriental, to me, this is another one of those stocks. It starts to have a move and then it chops around and it eventually goes higher, but the idea here would be to try and buy it on weakness, because that seems to be where you get your best moves. So I mean, you can see here off the lows here, you get a nice move, you get a nice move here, but then it pulls in and comes right back in. You're better off trying to buy it lower in the pattern. So I think here, if you saw a pullback to the 50-day line, you like it, then maybe you'd buy it on at that point, using that as your stop. But it just doesn't excite me. That was one of the things that I learned from working with Bill O'Neill, was the big stock principle and the whole idea of buying stocks that are highly liquid and dynamic and have a strong thematic basis, and the institutions are trafficking in them in a big way. And that's where you see some of your better opportunities. And you can see that happening when stocks start trading more volume. So for example, Momo much earlier was trading much lighter volume of about 800,000 shares a day, and now you've gotten to the point where you're trading 3.8 million shares a day. So now that tells you that this stock is getting much more mature, and you can see that the average daily, the moving average, the 50-day moving average of volume, which gives you your average daily volume, is this line here, and you can see that it's been trending higher, and it's telling you a stock is maturing. So that's what I like to see in stocks that I'm interested in. So, and I would rather be dealing with a smaller group of stocks that I feel are very strong, rather than trying to kiss all the babies and getting attracted to every single base breakout or pretty looking chart out there. So, and that was one of the things I learned from Bill O'Neill, because a lot of stocks I would show him, we talk every weekend. On Sunday night we'd have a call for about an hour and we'd go over ideas, and he would be very iffy about a lot of the stuff that I thought looked good, and I could tell there was something more than just a pretty chart. He's looking for something more, and a lot of that is either thematic or just understanding where the impact a company is having on its particular industry or on the economy in general, and just the whole big stock principle type thing. And there was some of that. I think that a large part of that is what drove his thinking in what he liked, and he felt a lot of the names that I might bring to him were, they looked good and they might work, but they were missing that certain thing he was looking for. And I think you develop that with over time with judgment. Of course, someone like Bill O'Neill, who's even at the time that I started working for him, he had about 40 years experience in the market, so he knew what he was doing. In any case, someone's asking me, do I have my list of short sale setups? Well, if you guys have been paying attention, I think for the last 3 weeks we've been telling you that we think Mobileye is weak, and of course you can just short it anytime it rolls over at near the 20-day line, and I've actually been campaigning this on the short side since then, so picking off any of these little moves. Sometimes I get stopped up and then I come after it again here, and it's fairly continuous and has continued to move lower, and it's below the 200-day line, so that's been a short sale target. And I don't know if I talked about Taser, but that was another one we were looking at maybe a while ago. It is sort of a big pod-like structure, and it failed here. So once we had the gap down, that was a shortable gap down. We've been talking about Smith & Wesson for a long time, and talking about it when it was up here around 30. So now it's down at the 200-day moving average. Is it going to bounce, or is it going to roll over? Good question. But the time to maybe be looking at shorting was when I first started talking about it. And a lot of people wanted to go long the stock at that point. But what I was looking at was this on the weekly chart. And basically it's a stock that's had a big move. And then it forms this big cup with a handle. And if you look at a lot of topping formations, the bases start to get a lot wider as you move up. And this is a algebraic chart, so it's a logarithmic rather, and it's adjusted for price. But you can see quite easily that as you're moving up, you got pretty tight structures in here on a relative basis, and in here, and then it starts to loosen up a little in here, and it comes out. Now you got this big cup with a handle, which is something of a pod, but not as deep as a pod, normal pod might be, but deep enough probably because it's straight down, bounces around for a while, and then goes straight up. So it doesn't base enough in here to consolidate this move. So now that's been a short for a while, and that's why I saw this up here. It took a little while for it to break apart, but that's where I saw that. And a lot of times I'm trying to anticipate patterns. Like yesterday, or was it a couple days ago, I went short Service Now. Now this is one that's been, it has this big V pattern, which I think is just kind of goofy looking. And it almost looks like some massive, here's your big head in the middle. So here's like a big head in the middle, and then a bunch of like right shoulders, which are all part of a big right shoulder. So it's a right shoulder with a bunch of big ugly moles on it, and then here's a sort of another right shoulder with a bunch of ugly moles in it as well. So sort of a, you could look at it as a left shoulder complex here that makes one big left shoulder, or in a right shoulder complex here that makes one big right shoulder, and then a big head where the right side of the head is characterized by a heavy volume break to the downside. So it's pretty textbook from that perspective, but you don't really get any final breakdown. You may eventually though. So if we look at the daily chart, what I'll do is when I see the market starting to reverse and I see a pattern like this, I know that that's potentially failure prone. The other thing is that you're starting to look good because you're just starting to clear to new highs right here. And a lot of times you notice every time this thing clears to a new high, when it's done it here, here, and here, it's failed. Boom, boom, not so much boom, but still it comes in. So I figure, okay, market's rolling back. I can see the NASDAQ peeling away from the highs. You're getting breakdowns in a lot of these hot leaders, so we're going into a corrective phase. And immediately what I'll look for is stocks that have these sorts of patterns. And I may have very well been playing this on the upside off of the lows, which I have with Now from time to time. But I'm watching the pattern develop, and once I get an idea that the market's going to roll, I'll just short it right up here at the peak. And I actually shorted it a couple days ago. That would have been what, Wednesday? No, Tuesday. Right up in here, and it broke. And then the next day, I think there was a downgrade, but it gapped down, and it was coverable at that point because you're undercutting all these lows. And now you're hanging right under the 50-day line. So this might be considered shortable here using the 50-day line at 75.82 as your stop. So you want to watch this one if we get a bounce tomorrow morning. It doesn't. What are the futures doing right now? Yeah, they're still looking grim. Maybe a little rally off the lows. No, looking grim. So who knows? But this would be in a shortable position using the 50-day line as a stop on the basis of a sort of big, ugly quasi-pod, massive head and shoulders thingy. So here's your here's the big head and shoulders type thing, but this also got this pod that makes it the right side, which is essentially this straight down, straight back up formation, then a big kind of base, ugly looking base, and it fails from there. So and that would be a pod failure, but also just a base failure or a right shoulder failure, depending on what you want to label it. So you have a variety of things you can call it, but the bottom line is I'm looking at this as being failure prone based on the two macro patterns, the pod and the big ugly head and shoulders, and it breaks down and that works. Now you're under the 50-day, it could be shortable there. Okay? Did I go through that one enough? Let's see, what else? Workday, that was another one. This one's a similar situation and similar type of pattern, but notice it's almost all the way back up to its old highs. I don't think it ever got past, well, it did once get to over 100 way back when. But this is failure prone, and nobody's going to buy them, it looks like, because CRM's too busy trying to figure out whether they want to buy Twitter or LinkedIn. So you got to wonder if they're ever going to look at buying a Workday or a Now or something. I don't think anybody will. Maybe when they get cheaper. So, but in any case, you see Workday broke as well on Tuesday, and that could have been shorted on that basis. I went after now, and it came in, and this is at the 50-day line, so maybe it bounces up to the 20-day line. So somebody says, somebody's asking, you have emphasized the need to be flexible and not rigid in your thinking in this market. Maybe a stupid question, but how do you train yourself to take profits faster? How do you, well, you just do it. I don't know about training yourself. I do think you need to break free of the whole mythology, can slim mythology and all that baloney. And it's a way of investing that worked really well during the secular bull market that I think ended sometime in the early 2000s, sometime between 2004 and 2008, I guess. And now you have to think in more of a swing trader's frame of reference. But there are a lot of ways to look at stocks in terms of waves to the upside. So if we look at this, for example, I played this stock all over the place, but mostly I was trying to catch these big moves, and most of the time I'm buying it in here. So once I'm up, if I'm up 20 to 30% in just a few days, I'm going to take that. And I may get out earlier, so I don't have a problem with that. Selling into Twilio, I think sold into here, and of course it went a little higher, but now it's broken down. So I bagged a good portion of the move up the right side of the base. Same thing with Line, another situation where if you're buying at the breakout point, you're just going to get whipsawed out. You can see that. So you get the breakout here. If you're a new high breakout buyer, which I think is the dumbest way to buy stocks, at least if you're going to do that, do the trend line breakout down here, okay, not up here. And you'll at least have a better shot, and you won't give up so much money if it comes all the way back to where you bought it, like it would have here. But here you've been stopped out and blown out of the position just before it sets up and goes back to the upside. And of course, if you bought the breakout here, you get blown out again. So you're better off trying to buy the undercut and rally setup. So you might see here you have one undercut and rally set up here. Boom, that worked. And then you have another undercut and rally here, where you undercut and boom, that worked. Came in a little bit, but never dropped below this low, okay? But in the process of doing that, it set up in another undercut and rally here, and that worked. So the undercut and rally setup was much more profitable than buying the stupid breakout. So, I can only imagine, and I guess from what I know from IBD, I don't think they're going to be in business that much longer. Just because people are getting chopped up doing this sort of thing and buying breakouts. It's not the same world. And you can't buy breakouts and swing trade breakouts. You're better off trying to use different types of setups and swing trade from that point. So it's better to swing trade from the lows of Line's bases up to new highs and then sell into the breakout than it is to try and buy the breakout, which would just lose you money. So one way I determine how to take profits is if I'm buying on a turn and getting it right on an undercut and rally, or say tight action, along a moving average or whatever, a voodoo pullback into a 10-day or 20-day line, or even a 50-day line, then it runs out of there. One easy way to figure out when to sell and take profits is you sell into the breakout, because they always fail. And that's just what I do. Here, I'll give you an example of a stock I played recently. I thought it was viable. Right along here, you're drawing up a little bit here. This Amberella, you're drawing up a little bit down here. It's just holding along the 20 down. So I bought in here. You get a nice move, and it's a breakout. And look at the volume. The volume's nice on the breakout. If you're a IBD devotee, or shall I say fool, an IB dweeb, as I like to refer to him. And I would point out for anyone who wants to get their feathers ruffled, that's what we used to call the IBD people back when I was at William O'Neill and Company, because we were upstairs and we were the institutional group and the money managers as well, and we made all the money. And all that money would be thrown down a black hole known as IBD, and so we used to always complain that the money we made was taken away from us, and we had carpet with holes in it. We used to joke that it was a status symbol if your office, when you needed new carpet, you got new, you didn't get new carpet, you got new duct tape to to cover up the holes. Anyways, so we used to get upset that all the money was being tossed at IBD that we were making, and so we called them IB dweebs. But now I just use that to refer to people who are still inculcated and brainwashed into thinking that you just buy breakouts and it's a happy world, you know. Here, though, this has failed. And as you can see from this extensively colored in purple downside arrow that I've drawn, it's busting. So you don't want to buy the breakout. But this thing was pretty viable in a lot of spots. Here's an undercut and rally down here. Here's a test of the 20-day line that could be bought. You know, so there's places to buy. Here's a bottom fishing pocket pivot down here. I'm sorry, not a bottom fishing pocket pivot, a bottom fishing viable gap up, a BF BGU. So that would have worked. That would have worked very nice, actually. And I think we did talk about that in the webinars around then. But look at that. You get a nice big viable gap up there down around 46, say. You buy it around there, and you get a nice run all the way up to 75 before it tops out. You know, and it's not until you get up here that you're forming anything that might look more like a base. There's a little one here, but this looks a little more significant, just a little more, maybe a week longer. And then, but it breaks out of that, and then it dies. So, anyways. But getting back to this whole idea of when to take profits, selling into breakouts is one thing I do, and that takes you out automatically. And then I just kind of get a sense of when things are extended. You know, up 10, 15, 20, 30%, depending on the character of the stock and how fast. In other words, if I get getting a huge amount of time value, so a 20% run, like what was the other day? We had a move in Momo. Yeah, I think it was like 18% in one day. Where was that? Or in 2 days. It was this move here, from here to here, from 22 to 26 plus in 2 days. You're going to take that, and then it comes right back in, and you can buy it back at the 10-day, and boom, you get another nice 10% move in 1 day, and boom, you could take that. So, you know, it's not perfect, and you're not going to sell right at the peak, but as you can see, that's a hell of a lot better than sitting here buying a breakout and getting blown out every time, or trying to position build something when it's just suddenly flipping on you. So it just doesn't work the same way. Anyways, somebody's asking, if in the MDM or VVM the report shows cash, does this mean that all positions have been closed? I'm assuming yes. So I don't, the VVM and the MDM, if you're a newbie, those are Dr. K's things, and I don't use either one of them. I don't think models are necessary to make big money in the market. Some people are into it, you know, they think it's an easy way to make money, but it's not really. And I think a lot, as Wyckoff would say, judgment is a big factor, and models are too mechanical for me. And I think they miss a lot of things. So I'm not really a big follower of models, but I do believe that cash means it's in cash. So, any other questions? I'm about ready to wrap this up. And I think we'll just see what happens tomorrow. I'm seeing some things trade down after hours a little bit. So I didn't hold any long. I bought some stuff, you know, on the undercut and rallies earlier, and I made some money today overall. An okay day, but nothing spectacular. You know, even with the indexes looking like they were going to gap down and descend into the into Hades, that didn't happen. So I think you know, we'll see tomorrow whether we're able to rally or whether it's just a short rally and then it rolls over and you can go short. But basically, if you're looking for things to short, and I'll just kind of close out with this. Oh, quick question. For intraday stock charts, do you use real-time hour charts or extended hours? I use 5-minute charts that are that include pre-open and after-hours trading. But anyways, if you're looking for short sale candidates, if we really get into a decent market correction or even a bear market, your best short sale candidates are going to be the stocks that were just on your long or your buy watch list. Okay, so example, Twilio morphs into a short sale candidate at the 50-day line on the late stage failed base setup, and that yields pretty decent profits. In fact, getting close to more than 15% on the downside if you hit it right near here on the 50-day line or on the gap here. I mean, that looked like death to me. Acacia, same thing. You could have shorted it once it closed below the 50-day, you had a little blip on, I think that was Monday morning, and you could have shorted right at the 50-day, and boom, it breaks to the downside, and you get about 10% out of that. But you can see how these are now turning into your short sale targets, and they're relatively young in their pattern. So as short sale candidates, not as long. I mean, they've come up a long ways, but as short sale candidates, they're just starting to break down. And so I think if we do get into a serious correction or even a bear market, then a lot of these stocks are going to be the things that you want to be looking at. So that's why I'm talking about now, and that's probably in a position. CRM is when we talked about before, but that was way up here when it started to fail. And more recently rallied back up to the 200-day line where it became a short again, apparently, and it's come crashing right back down. But that's what I think you're looking for. So even though I'm somewhat constructive on Facebook right now, having traded it off the lows today, but I'm not holding it overnight, if it did fail, this could also turn into a short sale target. And if you look at Facebook's weekly chart, it's been going for a while. So now it looks all nice and tight up here and constructive, right? Doesn't this look very nice? Notice how it's gotten so much tight in this little, so much tighter in this little sort of base on base, and this is a little looser and a little looser and looser, and so it's actually tightening up. So this means it's going to break out, but it looks so good, it's probably going to do the opposite. I don't know. But my whole point is that these leaders that you're watching, you got to keep an eye on them because they could end up failing, like Kacher and Twilio have, and a few others, and become short sale targets. So that's what I'm looking for. And if Dr. K and I agree on anything as a valid short sale setup, we will put that out in a report. I know we had been previously negative on Tesla, and there was a nice short opportunity here at the 50 and 200-day moving averages, and it's breaking down. But, I don't know. Elon Musk is going to have his Twitter account taken away from him because he seems to be able to get the stock to bounce on you every time he wants to tweet something inane and meaningless. But anyways, somebody's asking, what is for you the minimum average volume traded in a day for stocks and ETFs? I don't trade ETFs, so that doesn't matter. But stocks, I want to see, like I just said earlier in the webinar, I look for stocks that are big stocks, trading 1 million, 2 million shares a day. Looking for a minimum. Once you start getting down to 2, 3, 4, 500,000 shares a day, you're dealing with smaller stocks, and that doesn't really thrill me. So, the minimum isn't necessarily a minimum, nor is it all that meaningful with respect to the stocks I really like to trade, which are big stocks. When they're big stocks, you don't have to worry about them trading minimum volume because they're already well into a minimum volume range. So I don't really pay a lot of attention to it. So anyways, so we're in a position where we could rally. I'd like to see how far the rally goes. When that happens, there may be stocks that show up as short sale targets. On the other side of the coin, if the S&P's undercut of the September 12th low sets up a rally back up to the highs and the market sets up again and goes, then I might look for some sort of rotational moves. So big cap NASDAQ names that have been basing, some of which are starting to look a little bit better, that may be one place to go. And I covered a few of those. I noticed the airlines were moving today. You have Alaska Airlines breaking out. I don't know if it's going to try and go higher, but that's a pretty interesting move. Hawaiian Airlines is also finding some support. You saw Love was another one, flashing a big pocket pivot. UAL flashing a big pocket pivot. Delta Airlines, DAL flashing a big pocket pivot. So they're all moving. Now I don't know if this means we're going to see a rotation back into the airlines, because the airlines did actually have some nice moves earlier in the year. If you recall, looking at the weekly of Hawaiian Holdings, it had a nice move throughout the beginning of the year. So from here to here, from the February lows up into mid-April, and then you broke down, you set up again, and now you're trying to come out again. Now the flip side of this may be that it's setting up in a sort of a pod-like or late-stage base formation that's going to fail. So, but I think if I'm not so sure I would play the airlines necessarily as long ideas, even though they acted well today. I'd be looking for some of these big stock NASDAQ names to get moving, because even as the NASDAQ has made all-time highs, a lot of these names haven't gone anywhere. So I think if we see the hot IPO, new merchandise stuff like Twilio and Acacia falling by the wayside, then maybe money will rotate into these big stock, big cap NASDAQ names that have been basing. So so it would make sense that if the NASDAQ is going to break out and go significantly higher into year end, then you're probably going to see a lot of these big stock NASDAQ names break out as well. So that's one theme I'm looking at. Other than that, you might consider that the Fed is talking about buying stocks as another form of QE, and if they were going to buy stocks, then I would think they're going to buy big stock names like Apple, Amazon, Microsoft, Intel, Qualcomm, Netflix, Priceline, Google, stuff like that. Biogen, maybe some of the better biotech. So that's something to watch for as a theme. But it's not, there's nothing really crystallizing just yet. But I've got some ideas in terms of themes I'm looking for that could develop out of what I would call rotational correction. So in other words, where you see a correction in the market that is initially driven by some of the hot stuff that's breaking down, like the Twilios and Acacias and other names like the Ambarella, for example. And then you see a rotation into a new group or set of stocks based on a different theme that then drives the market. So that's something to look at. And I could be wrong about it being big stock NASDAQ names. Maybe it will be airlines. Maybe it'll be something else. So I think that's one thing to just watch for. Where are the pockets of strength maybe developing that could provide, say, new fodder for an upside move in the markets now that these hot names have all gone cold and are taking what I think is a much needed and well-deserved rest. So anyways, that's all I've got, you guys. Thanks for showing up. Hopefully next time Dr. K will emerge from the jungles of Costa Rica with internet service and hopefully a computer that's still alive. In any case, you guys, thanks for showing up. We'll see where this market goes, and we'll catch you next week. Have a great weekend.